Hello everyone and welcome back to my channel. In this video, we will discuss the price of Bitcoin from 2013 to 2022 in relation to its future. Compared to other cryptocurrencies, Bitcoin has a significantly longer track record, but it is still unique in comparison to the 200-year history of the US stock market. In less than 15 years, the value of Bitcoin has increased dramatically, going from being valued less than a penny to the equivalent of a brand new Lexus NX 250. In a nutshell, the history of Bitcoin has been marked by the same highs, lows, and big swings as we saw in 2021 and 2022. So folks, in today's video, we will explain how Bitcoin's historical events can be used to predict its future price. But before we get started, kindly subscribe to our channel and turn on the notification bell to receive notifications every time we upload a new video. With all that said, let's begin. The 2008 creation of Bitcoin by the unidentified developer Satoshi Nakamoto lacked a set value or price. After the blockchain was introduced in 2009, amateur cryptographers started mining Bitcoin and utilized it to settle bets and challenges with one another online. Before that historic day in 2010, when Laszlo Hanyecz offered his self-mined stockpile of Bitcoins to whoever could deliver a few pizzas to his house the quickest, it had no fixed value. According to US News and World Report, a Bitcoin transaction should be worth a quarter of a penny because the pizzas were estimated to be worth around $25. It was a turning point in the development of Bitcoin prices because the virtual currency now had a set price. To make a long tale short, according to Forbes, Bitcoin started trading at about $12 in 2013. That figure soared to $1,242 at the end of November, setting a staggering new high for Bitcoin, which at that time was trading for almost the same price as an ounce of gold. Later, prices dropped back to the low triple digits where they remained until they didn't. Bitcoin entered the high triple digits in 2016 and broke the $1,000 barrier once more at the beginning of 2017. It began to rise and never stopped until it reached its peak on December 16, 2017 at $19,497.40. Evoking analogies to the dot-com bubble of the late 1990s. Another bubble again. Prices quickly dropped below $10,000 and peaked in the low $3,000 at the end of 2018 and the beginning of 2019. Prices temporarily crossed the $10,000 barrier again in 2019 before dropping into a low four-figure slumber. Then the epidemic of 2020 arrived. The discrete, secure, and decentralized Bitcoin became a hot commodity after COVID-19. It hasn't subsided to 2019 levels since. 2020 saw Bitcoin start out at $7,200. By the middle of summer, it had returned to five figures, where it now stands today. It had surpassed the 2017 record and was trading in the $20,000 range for the first time by the middle of December. In 2021, the price of Bitcoin or BTC again reached a record high, with prices over $65,000 USD in February, April, and November of that year. The first two were brought on by incidents involving Tesla and Coinbase, although the third was not. The IPO of the largest cryptocurrency exchange in the United States and Tesla's disclosure that it had purchased digital coins valued at $1.5 billion each stoked widespread interest. The most popular cryptocurrency in the world, however, saw a significant correction in April as a result of rumors regarding government regulation. Experts also cited the Chinese province of Xinjiang's energy blackout as a factor. The number of Bitcoins being mined decreased as a result of this unexpected occurrence, which may have scared investors into selling their holdings. Moreover, half of all Bitcoin mining took place in China, according to a 2020 study based on IP addresses from so-called hashers who use certain Bitcoin mining pools. The third price increase coincided with the American debut of a Bitcoin exchange-traded fund or ETF. This raises certain issues that require clarification. The initial query is number 1. How high will Bitcoin eventually rise? Like all cryptocurrencies, Bitcoin is very speculative. How much it might be valued in the future cannot be foreseen. As noted by CoinDesk, Bitcoin has the potential to overthrow fiat currency, become the dominant digital currency, or even replace credit cards. However, it also runs the risk of collapsing and being replaced by something else, becoming irrelevant due to regulation or taxes, or losing out to a rival. Conservative estimates for Bitcoin state that it will reach $100,000 by 2023, but more optimistic cryptocurrency fans claim that $250,000 is not far away. The predictions of major financial firms are also being discussed. JP Morgan predicts a long-term high of $146,000, and Bloomberg predicts it may reach $400,000 by 2022. Therefore, financial planners advise only investing in cryptocurrency what you can afford to lose. You might also rest easy knowing that by investing in popular low-cost index funds and ETFs, you might already be indirectly investing in cryptocurrencies. Several Fortune 500 businesses such as Tesla and Square either already have cryptocurrency in their portfolios or have plans to do so. For instance, the electronic signature startup DocuSign has explored with integrating Ethereum to create sophisticated smart contracts. Number 2. What determines Bitcoin's price? Bitcoin's limited quantity and continually rising demand from more and more investors make it valuable. Some have also referred to it as an appreciating asset. People from a wide range of businesses also think blockchain, the technology that underpins all cryptocurrencies, has the potential to revolutionize business and increase transparency. Investors' attention has been caught by Bitcoin, according to Dave Abner, global head of business development at well-known cryptocurrency exchange Gemini. The volume of Bitcoin currently being purchased and sold is sufficiently high that institutional investors perceive a chance to join, he explains, with a market cap of approximately $900 billion. Number 3. What information about Bitcoin do investors need to know? We urge customers to understand what kind of investor they are and only purchase Bitcoin in a method that fits with their long-term goals. He cites Warren Buffett, a well-known value investor, as an example of someone who decided against participating in the cryptocurrency market because it didn't fit with his entire strategy. We assert that people have FOMO, or fear of missing out. Many people begin to wonder, what am I missing? However, before investing in cryptocurrencies just because others are, you should take a look at your portfolio. In conclusion, during the course of its brief 14-year existence, Bitcoin has decisively outperformed the stock market, the property market, and the precious metals market during one of the largest bull runs in the history of investments. A wealth sprang from a pizza for those who could take the roller coaster, but it was a wild and unpredictable ride with high bubble inflation and violent drops. Thank you so much for sticking with me through the entire video, guys. If you want to see more of this, please turn on the notification bell and subscribe to my channel so you may be notified every time I upload a new video. See you in the following video. Bye!